Alright guys, so by popular demand, one of my most requested videos is essentially a tutorial on how to start investing and the best way to go about investing, because I can explain it to you very quickly, very easily. It's easily understood and it requires very little work. It'll get you started, it'll get you on a good cadence. You'll eventually start making a lot of money in the long term if you stick with it, especially because at the time this video is being made, the market is down quite a bit, and there's even expectations that the market's going to continue going down for quite a while. If it does, that makes this an optimal buying opportunity. So I thought it would be a great time to not only make a very simple and straightforward tutorial video breaking it down by steps, but also plug the Discord, because as you guys know, I run a Discord that's all about teaching people how to invest, how to trade, how to make more money using the stock market. So let's get into it so you guys can make more money. So the first step is that you're going to need a trading platform. A trading platform is basically a website or an application that holds your stocks, as well as it can hold a cash balance as well. It's also the place where you're going to do your buying and selling of stocks when it comes time to do that. My recommendation is Webull. It's the application that I use. It's free to use, it's easy to use, and they also constantly run really nice promotions on getting free stocks for referring people, for signing up, for depositing money. It's honestly a great all-around platform, and I highly recommend it. It's honestly what I use for my biggest portfolio. I also would like to mention that down in the description, I'm going to have a link to my referral for Webull. If you use this link, you are eligible for a one-on-one training session with me. I teach stocks, options trading, and charting. Whatever you want to learn, it's a personalized training session for you, and a great way to either get started or learn more from where you're currently at. If you take advantage of this offer, be sure you join my Discord if you haven't already, and send me a DM saying that you signed up with my referral link. Step number 2, you need to fund the trading platform. You need to deposit money from your bank account into the trading platform. This will create a cash balance in the trading platform, and then you're going to use that balance to purchase stocks. This step will be a little confusing because the amount that you deposit is dependent on you and how much you are willing to lose, because theoretically the market can die out. So I always say, only invest what you're willing to lose, and don't invest an amount that makes you financially strapped and so you live uncomfortably. Live comfortably, but it is a good idea to deposit as much money as you can, because right now inflation is at record highs, and so your money is decreasing in value every single year. And if you own stocks, then on average you're going to receive 10 to 12% increase in the value of your stocks. So your money is making money, your money is working for you instead of your money losing value over time. Webull makes this really easy to figure out. It's really easy to deposit from your bank account into the trading platform, and then whenever you end up selling your stocks, it's really easy to transfer back from Webull to your bank account. Step number 3, once you have money deposited, it's settled, it's in your bank account, you have what's called buying power, you then buy stocks or options. However, this is about long-term stocks. So you're going to buy primarily individual stocks or ETFs. My 2 recommendations are the tickers, the stocks SPY, SPY, or VOO, VOO. These are both ETFs that track to the S&P 500, which basically just means that you're buying the top 500 companies in the stock market. Makes up about 504 stocks currently. And so when you're buying that, you're buying a basket of stocks, which makes it so that if one starts performing poorly, then the others will hold up the total value of your stock and you won't end up losing a lot of money. A lot of stocks right now are down 50% or more, while ETFs are typically down about 20%. If you buy these ETFs, SPY or VOO, they have yielded about 10% year over year since their inceptions. They follow the S&P 500, which has yielded about 10% returns year over year since its inception. So that means that you make 10% this year, most likely, you'll make 10% next year, 10%, 10%, 10%, etc. Obviously, it doesn't actually follow this specifically, because some years you can lose money, some years you gain more, some years you gain less, but it averages out to about 10% year over year, which is a very solid amount to make, especially when you factor in compounding interest. If you have any questions about compounding interest, we have a video in our Discord about compounding interest. But utilizing that over the long term, 10% year over year, you're going to make a lot of money if you invest for the long term. You buy those safe, smart stocks, SPY and VOO, then not only are you safeguarded in an economic downturn like we're facing right now, but you also get safe, consistent returns over the years. You'll eventually make a lot of money through compounding interest. However, if you are interested in getting higher returns than 10%, our Discord signals consistently beat the market. And so you can join our Discord, which is also linked down in the description below, and you can sign up for our stock trader role, which gives you access to our long-term signals. Those are stocks that we plan to hold for the long term. They're very easy to follow. It's just a little bit more involved than just buying SPY or VU. And then you'll very likely see larger returns than 10% year over year. You might see even higher than that. Step number 4, you set up a monthly cadence to deposit money. Now, this could actually be every 2 weeks. It could be every month. Or if you want to space it out more, you could do every 3 months. But basically, you want to set up a consistent cadence where at certain time intervals that you keep consistent, you deposit money into the trading platform so that you can buy more of these stocks. Keep in mind, one thing that I did forget to mention in the last step is that on Webull, you can buy partial shares. So if you go on and you look and you see that SPY is currently sitting around $400 a share, and you're wanting to deposit $50, you can still buy by buying partial shares of SPY or VU. But setting up a monthly cadence allows you to continue buying every single month. There's a term for it called dollar cost averaging, which is either buying at certain cost intervals or buying at certain time intervals every single month, every single week, every single 3 weeks, whatever it may be that you decide to follow, but you deposit on that consistent basis. You'll continue buying those stocks every single time you deposit, and you'll see some pretty massive gains over the years, especially if you keep up consistent and you make sure you're depositing at least the same amount every single month. And finally, step number 5, once all of that is done, you've set up your trading platform, you've bought stock, and you're on a cadence of depositing every single month or every 2 weeks or whatever you decide, you're on that consistent cadence. The final step is to figure out ways to invest more. The more you invest now, the more money you're going to have later because the market generally trends upwards. This step is going to be different for every person, and it depends on what you want and what you're willing to do. But essentially, there's 2 sides to the equation. The first side is your expenses, what you pay for every single month, every single year. And these can include things like food, gas. I mean, you know your expenses the best, but your expenses are what you pay every single year. So if you focus on reducing your expenses, every single dollar that you reduce from your expenses is able to be put back into the market. Whereas the other side of the equation is increasing your income is not dollar for dollar because you're going to be taxed on whatever extra money you make. But it's really important that you tackle both sides. Try to decrease expenses wherever you can without, again, making yourself uncomfortable, and try to increase your income in other areas, obviously through legal means, so that way you can invest more as well. You tackle it from both sides, you're going to end up making a lot of money. I'll give you examples. So for the reducing of expenses, after I graduated college, I was spending a lot of money eating out and ordering Uber Eats delivered. In fact, you would probably be sickened if you saw how much I was spending every single month. When I sat down and looked at this and realized this, I decided to take a step back and I cut out the spending mostly. I obviously still eat out a little bit. I still have food delivered a little bit, but not very much at all. I cut out a lot of it. I ended up saving over $150 on average every single month. And so that's $150 extra every single month that I could put into the stock market. I personally deposit every single month right near the beginning of the month. And then when it comes to increasing income, it's just as simple as finding ways to either create a side hustle, which it would be more like active income, or creating passive income. Active income is using your time to make more money. So this would be going out and delivering for DoorDash. This would be getting a second job. This would be doing some form of side hustle that requires work. So working on cars, detailing, there's endless options, but using your time to make more money. And all of those are great options. And you can obviously come up with more because you know your skills and abilities more and what you're willing to put in to make more money. And then as for passive income is quite simply money that's made without you putting in the time. Now, the stock market is passive income. You make more money by just letting your money sit there in the stock market. I more or less use the stock market as my bank account. And so every single year, on average, I make money without having to actually put any time or effort into it. The market just makes me money because the stock market generally increases year over year. And long ways down the road, I'm going to end up making a lot of money because compounding interest, market continues going upwards, companies make more money, etc. But the more money that you make passively, the more money you can invest, and that's not your extra time that's being taken. And the more that you figure out how to invest, the more money you're going to have down the road. You can look at it this way. If you follow all these steps and you set up a cadence and you're investing X amount of dollars initially and X amount of dollars every single month, then there will be a day where you're able to retire or become financially independent, as I prefer to put it. Whatever that day is, it depends on how much you're investing. It also depends on how markets go. It depends on what you buy, everything like that. But there is that specific day. For me personally, with the way that I have money deposited and the way that I continue depositing money every single month and plan to increase that as well, I'm looking to become financially independent at the latest by my mid-30s. However, every single month that I increase the amount that I invest, or even if it's temporary, so just one time put more money in instead of a lower amount, I'm pushing up that date. So you invest more, then every single time you do that, the date's pushed up and it becomes closer and closer and closer until it becomes close enough where you're practically able to retire anytime you want. Now, I do have some more advice on that, and that's just simply once you feel like you're comfortable and once you feel like you're able to retire from your assets, I'd still recommend continuing working and continuing that cadence for at least 1 to 2 more years to make sure you build a solid foundation. But that's just some extra advice I wanted to add in. But yes, those are the 5 steps that I follow and that I would personally recommend you follow if you're interested in maximizing your safe long-term investments in the stock market. You don't need a ton of knowledge. You don't need to follow the market. It's not very time consuming. It's actually quite simple and straightforward. All it requires is patience and discipline. Patience because it's long term, so you need to be fine not touching this money and letting it grow over the years. Discipline because you need to be able to be disciplined and not worry when the market freaks out. Right now, there's tons of people freaking out because the market's down. You need to make sure you don't do that. You step back and you're like, I'm not going to sell. I'm not going to freak out. I'm not going to panic. And I prefer to look at it as, hey, the market's down. The market might continue going down. I'm just seeing better buying opportunities so I can buy cheaper stocks more often before it finally recovers and I end up making a lot of money. I hope this video was helpful for you guys. If you ever have any questions, don't hesitate to either post it in the comments below or join our Discord, which is always linked in the description. We have plenty of members, myself included, who are happy to answer any questions you have. And the Discord is free to join, so you're welcome to join and ask questions at any point. Thank you guys for watching. Be sure to comment, rate, and subscribe. And as always, have a nice day.